Good morning and welcome back to Almus Market Mornings. Just when markets thought they'd seen it all, Elon Musk and President Trump are in a full-blown breakup. Musk is calling for impeachment and grounding SpaceX Dragon capsule, marking what might be the most expensive unfollow in history. Back to the markets, US yields climbed as European bond sell-off stole the show. Despite softer labor data from the US, the ECB cut rates as expected, but sounded in no rush to do more, lifting Eurozone yields. Good morning, JK. I think this public spat seems as dramatic as an Indian soap. Anyway, RBI's rate decision is today. Can you dissect it for our listeners? What are we expecting?
Good morning, Suraj. Yeah, I think looking at what's going on between Trump and Musk, I think it's very unfortunate and not in very good taste at all. Because in how many countries can you see a businessman almost threatening the head of the government and saying that you won because of me, and I can see that you may lose in the next by-election. So, yes, there could have been trigger, and that's also again not in good taste because he's hurt by Republicans' push to end electric vehicle tax credits. So, it's a clear case of open lobby. And if the same thing were to happen in emerging market, how they would have reacted. And because it is US, we are still seeing markets there stable, and overall dollar is also stable even after all this. Yes, of course, this is not just, this is adding to the very list of negatives from the US, and which is really making the quality of the leadership role that they have taken on for several decades into further downward trend. So anyway, that's not really affecting the markets. What really affected the market were two data points. One was, of course, the ECB rate decision, and ECB, while cutting rates for by 0.25%, and this is the eighth rate cut they have done since last year, and almost indicated that they are done. So ECB president said that we are in a good place now with this 0.25% cutting, and although there is a trend of disinflation in the US, that's probably going to be temporary. And we are actually looking at inflation rising because of the huge amount of spending that the European governments are lining up for defense and infrastructure in the coming days. There's also likelihood of ECB issuing a common bond going forward. So in fact, after the ECB meeting, we saw the yields in Germany go up, and that actually pushed the yield in the US also higher. Now, the other data point I was looking at was the jobless claims, which again rose, by 7,000, and that was, not expected by the market, and adding to the previous. Actually, it rose by 8,000, and 2,000, 2,47,000 was the number. And this is as against 2,39,000 that was expected. The highest level since October of 2024, suggesting early signs of softening in the labor market amid ongoing economic uncertainty. While the continued claims fell slightly, they are also quite elevated. And so, possibly this week, if you look at the JOLTS data, although there were job openings which are slightly higher, we had a quit rate that was falling, and the retrenchment rate that was rising. Then we had the ADP number, which was much, much lower at 37,000. And challenge job cuts was on the higher average, and now this weekly jobless claim. So the leading indicators for the US employment data, the final number that will come today from the government side, is not good. So one should be prepared for definitely a softer number, although NFP always surprises, you know, to the other side of what the market is expecting. But I mean, if you go by whatever anecdotal evidence that we have seen, not only from the data of this week, but also on the various economic data, other economic data on consumption, and the retrenchments that came about due to Doji and all that. If you take all that into account, it's not yet really reflected in the non-farm payroll and unemployment rate data. So today's data could be very decisive for the markets to know where the economy is headed, and also to see if we see a new trend in the dollar. I have to repeat myself that this underlying trend for the dollar has been down. Yesterday also, even on a smallest hint of the rate cut pass by ECB, euro almost touched 1.15 and just a whisker away from its cycle high of 1.1575. We don't see this trend of softer dollar changing. In fact, yesterday there was a huge rally in metals also, which was also part of the expression of dollar weakness. Silver made a huge move of about 7%, and platinum was also higher. Crude oil has based out, and again, that's also reflecting softness in the dollar. So overall, this trend is not ending, and various developments in the US, be it through economic data or otherwise policy making, it's not really supporting the dollar in any way. We did have, of course, trade data from US, which was much lower at below 70 billion compared to 148 billion. But don't get carried away by this big drop, because 148 billion previous month was because of huge stocking that the US importers made ahead of imposition of tariffs. That has actually been compensated by a fall in imports in the next month. We also had this semi-annual currency report from US Treasury, where it found no major US trading partners manipulated currency to gain unfair trade advantage. So there is no mention of currency manipulation, which is a relief, kind of. At the same time, they are also mentioning about China, have not somewhat influencing the currency. They did not call them as manipulators, but they said they're influencing the currency movement. So that's something which should, possibly market will take note of. Although China is very strongly holding on to their own, currency management methods. On the tariffs, of course, there's a good news that Trump and Xi had a phone call, and according to Trump, the call lasted almost 1.5 hours and resulted in a very positive conclusion for both the countries. And the conversation was focused almost entirely on trade. There was also a report saying that Premier Xi has invited Trump to visit China. So something, some positive thing to take away from the markets yesterday. Overall, it was a volatile session for the bonds. Initially down on the weekly jobless claims, and then up on after Lagarde's speech, when German yields went up, it also dragged the US yields higher. And also, don't forget that US has large amount of fresh issuances coming up as they roll over the old maturities, and market is preparing itself for not such a great response for these issuances, and that's why even on a weak economic data, the yield is not going down much. So overall, dollar will now await what comes about in the non-farm payroll report. If it turns out to be stronger than expected, you will see some correction, mild correction in the dollar. But if it is softer than expected, I think we should expect a break into new lows of the cycle. So it's very important data from that perspective. As the rupee is concerned, we have not seen much retracement, or even after testing 86, and it's been moving in the higher range between 85.70 and 86. Market might be probably awaiting outcome of RBI meeting tonight, rather today morning, whether it's 0.25 or 0.5%. It seems to be the outflows are still slightly dominating, and that's the reason why The sellers are not coming. Yesterday, we did hear of some small inflow, but that was well taken by the supplies, and we are once again trading near 85.70, which is near higher end of the recent range. RBS statements on expected GDP growth and full year inflation numbers. These are something that we will look forward to. Of course, markets main eye will be on whether it is zero point 0.5 or 0.25. 0.5 cut. Some people believe that rupee can weaken more because of the lowering of differential with the US. But I think that even that happens, that could be somewhat temporary. So it's at 10:30, and we'll update you on what happens in the RBI meeting. Thank you.
Thank you, JK. And towards the end of the week, a whole host of updates for us to conclude the week with. Of course, we're starting with yesterday's ECB meeting, which cut rates by 25 basis point. But as the president indicated, it seems that they are more or less done with rate cuts as of now. After the ECB meeting, euro almost touched 1.15. Metals rallied as well. Silver, platinum, oil were higher. So underlying soft dollar theme remains, even though we are seeing some retracement today morning. When it comes to rupee, we are moving at the higher end of the range between 85.70 and 86. RBI policy would be closely looked at. Full year inflation and growth numbers will be looked at, and of course, whether a cut of 50 basis points or 25 basis points. That's it from us, Ray. Thanks for listening. Have a good weekend. We'll catch up on Monday with a fresh round of updates.